For young people, it's a gift. It's a true gift.
It is.
I'm 56 and I'm 100% allocated to this, but I have savings and income and houses. I've got all of the stuff, right? So I can afford to take the risk. If you're not, you better get pretty familiar with the cycle. And it's the business cycle. It's the same cycle we've always looked at. So it's nothing unusual. Yes, it's driven by the credit cycle. Yes, it's every 4 years right now because of the debt refi cycle, but it's the same cycle. So if you can navigate, and that's the work that you do, the work that I do and stuff like that, if you can navigate the cycle, we can dampen your volatility significantly. And that's our job, to try and help you do that. I think it's suboptimal. Actually, Jeff Bezos didn't trade around his shares according to the cycle. What you really should be doing is focusing on your investment side and then increasing as much income as you can to then buy the sell-offs when they come, because you're back at all-time highs well before the market is.
Raoul Pal predicted that the current cryptocurrency market bull cycle, initially expected to peak in 2025, could extend into 2026 due to a prolonged economic cycle. Paul addressed the chaotic market situation, reassuring cryptocurrency investors facing high volatility and explaining why he believes the cycle's expansion is consistent with broader economic indicators. The veteran macroeconomic analyst noted that the sluggish economic cycle below the key threshold of 50 on the ISM survey, a measure of economic activity, is now showing signs of expanding, pushing back the cryptocurrency market's peak. According to him, the economic cycle takes time to continue below 50% and is just beginning to expand. This has likely extended the cycle into 2026, he said, adding that this shift is not yet a firm prediction, but a structural observation based on current data. He links this extension to improving financial conditions, including a weakening US dollar and expected lower interest rates, which he believes will boost risk assets like Bitcoin and altcoins. Paul pointed to Bitcoin's recent plunge from a high of $110,000 to $80,000 and Solana's 53% price drop as signs of volatility typical of a bull market, urging patience. He pointed to historical patterns, such as the 2017 cycle during Trump's first term, where a similar dollar-driven economic slowdown preceded a surge in cryptocurrencies. Paul's analysis, supported by global M2 money supply charts illustrating growth, suggests that following an unstable period until mid-March, prices could accelerate in April, May, and June 2025, with a further spike in 2026. Paul's approach is, don't screw it up. In his thesis, Paul advises against leverage and overexposure to small altcoins and advocates for a portfolio anchored in major cryptocurrencies such as Bitcoin, Ethereum, and Solana. He highlighted Solana's oversold status relative to the global M2 as a buying opportunity, predicting it will outperform Bitcoin and Ethereum through the end of the cycle. Solana is expected to outperform Bitcoin for the remainder of this cycle, as well as Ethereum and SWI outperforming Solana, refuting rumors of its demise amid the cryptocurrency meltdown. Drawing on extensive research from Global Macro Investor, Paul linked the cryptocurrency's trajectory to macroeconomic factors such as the ISM index, which he predicts will rise above 60, potentially propelling Bitcoin beyond $300,000. According to Raoul Pal, a simple and easy strategy, just hold Bitcoin Solana for the long term. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
A, the debasement of currency, and B, these two secular trends, the cryptocurrency trend and technology trend. I then compared every other asset class against them.
Yeah.
And I realized that contrary to what we've been taught to do our whole careers, there is no point diversifying because every outcome that doesn't involve those two assets is suboptimal. So here's macro guy who traded credit, oil, emerging markets. I don't do any of it anymore. None of it.
Yeah.
I've hyper concentrated because I'm like, okay, this is the greatest macro risk-taking opportunity of all time. And we've been given a gift of these assets. And I'm going to do that, which is very, very contrary to what people say you should do. But if you're not beating the 8% is what the global growth in liquidity is, plus let's call it average 3% inflation, whatever the number is, right? That's an 11% hurdle rate. Yeah. The S&P 500 does about 13% a year. You barely beat it. And I think you're doing yourself a disservice. And I know this will make people angry, but you trying to focus on your small caps or your mining stocks or your commodity plays, yes, at cyclical points in time, they'll do fine. But you're really actually handicapping yourself from the biggest secular trend of all time. And a secular trend just makes it easy, right? Commodities are cyclical, they go up and down. Well, a secular trend, you could just buy it and go to the beach and come back in 5 years' time and you'll have made money. You can't do that in commodities. It took me a long time to understand this, is how much easier your life is.
Totally.
And then if you've got a guide like you who can help you increase your risk return, if that's the way you want to do it, then even better. But, and that was a huge epiphany to me, is I don't need any of this other stuff anymore, because this is the big one. And that's what I'm focused on.
Paul has boldly endorsed the growing crypto art market, calling it an excellent set it and forget it investment option for the next decade. Paul shared his optimism on social media, highlighting the unique potential of non-fungible tokens to transform art, investing, and digital culture. Paul argues that the NFT industry and crypto art in particular will benefit from key macroeconomic and generational trends. Massive wealth creation in crypto combined with currency devaluation will drive incredible demand for scarce and desirable assets such as digital real estate or digital art, Paul wrote. He also highlighted the growing preference among younger generations for digital assets, which they find more appealing than traditional physical investments. Paul touted the effectiveness of NFTs as investment vehicles. Unlike physical goods, which entail significant maintenance and storage costs, crypto art is relatively inexpensive to maintain. Furthermore, NFTs can serve as collateral just like traditional assets, making them more attractive to investors. Physical assets are expensive to maintain as an investment and better fit into a lifestyle, Paul said. Art fills that gap, and preserving crypto art for long periods of time is extremely cost-effective. He also highlighted the intrinsic cultural value of crypto art, emphasizing its ability to symbolize cultural and communal experiences. This makes it not only an investment, but also a transformative way to preserve and interact with digital culture. Paul reiterated his bullish outlook for Bitcoin, Ethereum, and Solana, calling these cryptocurrencies the greatest macroeconomic trade of all time. Despite recent fluctuations and short-term volatility, Paul says the market is well positioned for an explosive breakout, which investors should prepare for. While Bitcoin, Ethereum, and Solana are facing a downtrend due to rising volatility, Paul maintains his optimistic outlook, believing the market is the greatest macroeconomic target of all time. Paul suggested that the cryptocurrency market as a whole is currently dominated by fear and panic. As volatility increases and cryptocurrency prices trend downward. He explains that a significant portion of cryptocurrency investors or traders are currently bearish. This could be explained by the fact that after the Bitcoin price fell below $100,000 following the announcement of Donald Trump's tariff plans, many altcoins also fell sharply, with Ethereum, Dogecoin, and Solana among the biggest losers. Due to this market shift, many players sold their tokens to avoid further losses. Despite this bearish trend, Paul maintains an optimistic outlook, expecting strong gains in Bitcoin, Ethereum, and Solana.